Hi, this is Kerry Artak with Artak Advisory, and this is the AgriTalk video supplement for Monday afternoon show, July 12th, 2021. In the show, I cover December corn, September wheat, and August feeder cattle. Before I jump into the charts, just want to encourage you to take advantage of my 2-week free trial offer. You don't have to provide any payment information. There's no obligation. You fill out the free trial form on the website, artekadvisory.com. You're probably there right now. And first name, last name, email address, and preferably a phone number so I can reach out and talk to you not only about the newsletters themselves, but I like to find out about your trading and hedging requirements and how it is that you go about your life in the world of the futures market. And, obviously, the end game for me, my desire is that you become a regular monthly subscriber, but there is no hard sell. It's just an enjoyable conversation, and you're either interested or not. And then there's no long-term commitments. It's a month-to-month subscription, really. So I would love for you to take advantage of the 2 weeks. And if you have had a free trial before, if you haven't had one in the last 6 months, you're free and encouraged actually to have another. Every 6 months, I offer 2 weeks to anyone. Anyway, let's jump into Monday's show, and I'll start with December corn. The first chart I'm going to show you is a weekly continuation chart, volume-based rollover. That's a minor detail with regard to continuation charts. Futures markets, continuation charts, they are the stringing together of previous contracts. It's about the only way you can really analyze a futures market. And then there's a slight nuance, which is to say that traditionally, continuation charts, you'd have the lead contract continue all the way to its very expiration when it was off the board, so to speak, and replaced by the next active contract. With volume rollover, I roll with volume. In other words, for instance, right now we have the DEES 21 contract. In early December, it will be replaced by the March 22 contract in Chicago Board of Trade corn. And so when the volume is exceeded in March, the December volume is lower than the March volume. The volume in March exceeds the December volume, and that'll happen likely the first week of December, typically. Then I shift to March being reflected on my long-term charts. I don't know why I'm getting so detailed about that. I just want you to know how I do that. I call it following the money, and I find it a more proficient way to follow the markets. Now, if you look at this chart, this weekly continuation chart, a traditional one, it would look initially almost identical. But as you kind of poked around and looked, the highs and lows might be a little different. And so anyway, here we have the weekly continuation chart reflecting the DEES 21 contract, and we have a speed line that was settled below several weeks ago, and that was my sell signal into later summer and early autumn. At the time that we broke the 646 and a quarter speed line, I'd mentioned 464 and 3/4 as a 3 to 5 month target. With heightened volatility, I've narrowed that to 2 to 3 months, and in all reality, we may be just 2 or 3 weeks away from testing the targeted 464 and 3/4, which I would anticipate able to contain selling not only through the rest of the year, but I term the 464 and 3/4 channel top as our new floor of long-term support for Chicago Board of Trade corn. It was formerly a channel structure that had held for 6 years, and then we closed above it in December of 2020, about 8 months ago. And it is sort of the new floor of support. I anticipate it holding into next year, and from there, the market can consolidate, stabilize, and even turn higher as we continue into spring, summer of next year. So let's talk about the upside, 646 and a quarter. I don't anticipate seeing that this week, but volatility is still a bit expanded. And if we do see 646 and a quarter this week, over the next few weeks, it is rising ever so gradually. It can absorb buying pressures through the rest of summer, and from there fall back into the 464 and 3/4 area within several months. So that's the dynamic I see going into autumn trade. If we were to close above 646 and a quarter, then the sell signal has been neutralized, and over the following 2 to 3, 3 to 5 months, excuse me, the market can continue into the 830s. Although on the show I'm talking about kind of a 525, 535 area of resistance. Sorry, did I say 5? I meant 7. But that's a whole nother subject altogether. You got 735 and a quarter as the high from May. And so, you're going to get you might get a double top there for a few weeks. But I think, and I don't know why I'm slipping into this mode, I'm slipping into the near-term outlook, when really the bottom line with this chart is holding below 646 and a quarter, anticipating 464 and three quarter as a completed objective where hedges can be lifted and you can start establishing a long position perhaps as you continue through the rest of the year. Inversely, closing above 646 and a quarter would neutralize that long-term sell signal, long-term being down to 464 and three quarter. And with that, you should prepare for an 834 and three quarter target. The timing of that is difficult. It could be 2 to 3 months. It could take all the way to the end of the year for that to achieve. It depends on how the market treats the 735 and a quarter May high, whether it tops out there for a month or two, or whether it tops out there for just a week or a few days and then continues onward and upward. That latter scenario, that could be a 2 to 3 month target at 834 and three quarter. 834 and three quarter, long-term resistance, able to contain buying through next year. Let's move on to, actually, I'll show you a weekly. This is December 21 data only. There's no other contracts on this chart other than DS21. And you can see there's some symmetry here. I've got 486 half down to 468 even. Now, you know that 464 and three quarter is my ultimate target right here. But just know that, true long-term support begins at 486 half all the way down into that 464 and three quarter area. So the bottom pickers of the world, or those who are lifting long-term hedges, will begin to do so in the 480s. And that's just kind of the way I see it. And this is 646 and three quarter. This is just a horizontal line representing this long-term speed line, which once again is our resistance through the rest of the year. On to September wheat. We got a sell signal a few weeks ago in September wheat when we settled below this 651 and a quarter long-term speed line. I do anticipate 524 and three quarter now. I'm giving this a 2 to 3 month target, maybe sooner, depending on volatility and directional continuation near to midterm. But 651 and a quarter is our ceiling now through the rest of summer. And as I say, below which 524 and three quarter remains a 2 to 3 month downside objective. This channel bottom then at 524 and three quarter, able to absorb selling not only through the rest of the year, but even into spring, summer, or next. From here, we can consolidate and turn back up. Now, even if we get above 651 and a quarter this week, for instance, I'm not convinced that the market wants to charge northward aggressively. And I'll show you kind of the weekly chart. This is September only data, not a continuation chart. The data here you see is the September contract. And you can see while I've got 651 and a quarter as a long-term ceiling, a long-term line study, not until or unless this market closes above 683 even do I see a full reversal of upward momentum. And so you can see you've got a range of resistance that begins at 651 and a quarter. That's your sell area, and your stop loss getting out and going long would be a settlement above 683 even. And if we did close above 683 even at the end of this week, and that is a long shot, I don't expect it, but if we did, then I do think that the 844 level, this long-term speed line, becomes a 2 to 3 month reality. So if we close above 683 even at the end of this week, and I'll draw a horizontal line to kind of represent that 840, there's 843. That would be the objective, 2 to 3 months, closing above 683 even. If we closed above 683 even at the end of this week, we just might reach this 844 area by September contract expiration. But until then, 683 even is the top of a range of resistance that begins at 651 and a quarter, and below which 524 and three quarter remains a 2 to 3 month downside objective. And that's just kind of the way I see it. Anyway, finally, let's talk August feeder cattle. About 3-4 weeks ago, we got a decent buy signal above this long-term channel top this week at 153.65 that, if tested this week, can absorb selling through the rest of the year. And when I say selling, I'm talking not just the August contract, but the October contract, so forth and so on, all the back months. This is a broader market chart. This is a weekly continuation chart, volume rollover that presently reflects the AUG 21 contract. 153.65, significant long-term support, able to contain selling into spring, summer of next, and above which I have a 3 to 5 month target at 182.02, where this market, the broader feeder cattle market, can top out on a seasonal basis. So if we test this in, say, winter of this year, it can contain buying into spring of next, and from there we can fall back. But I will say this, the recent buy signal above 153.65, I am not going to ignore 224.15 as a long-term possibility. I consider 182.02 kind of the first objective, big picture speaking, and that ultimately 224.15 wouldn't surprise me maybe by this time next year. And so that's the big picture. 153.65 long-term floor, above which 182.02 remains a 3 to 5 month upside target. Now, along the way, on the way up, this is the August chart itself. This is only August data, and you can see that there is respectable resistance right now at 165.70. I wouldn't be surprised to see this contain buying through July and into August expiration. And then once the August contract is replaced by the October contract on this chart, October takes over the 182.02 objective, if you catch my drift. So as far as August is concerned, due respect should be made for 165.70, able to contain monthly buying pressures. And if we close above 165.70 in the next week or two, you can see here, once again, I'll just draw a line representative of that 182 area. It doesn't take a stretch of the imagination to see that that is actually possible by August expiration, perhaps. So if this market rallies this week and closes Friday above 165.70, we've got maybe another 3 to 5 weeks before we reach this 182 target, 182.02, once again, able to contain buying into fall, into winter trade, and from here the market can fall back. Let's talk downside. If we close below 153.65 at the end of this week, then I see the signs for, and I don't have these illustrated, but I've got 143.5 as a 3 to 5 week target, and we could continue all the way into the 123 handle over the following, I don't know, 3 to 5 months perhaps. So keep that in mind, that closing this week Friday below 153.65 August feeder cattle would be considered a failed long-term buy signal, which is, in essence, as far as I'm concerned, a valid sign of weakness over the near to midterm time horizon. And I would expect, once again, 143.50 within 3 to 5 weeks, which would put us into August expiration. And then the October contract could potentially continue south into the 123.5 area within 3 to 5 months. But we're not there right now. Bottom line, with broader market feeder cattle, very constructive through the rest of the year above 153.65. And as far as the August contract is concerned, we get a nice blast to the upside, follow through buying into expiration if it can close this week or next week above this 165.70 area. I think that's really all that needs to be said for this particular AgriTalk video supplement for Monday's show, July 12th.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.